Okay, so this is section 4.2, and we're talking about posting to the ledger. And we are following in our textbook on page 116 to 132. As you can see, this sections, we have a lot to learn actually, and we're going to talk about entering data and calculating balances using a ledger account. And a ledger account, we think of it as a recipe card, and every one of our accounts has one of these recipe cards, and we keep track of how much money we have in that account at any given time. When we transfer information from the journal to the ledgers, we call that posting and journalizing. We're also going to review trial balances in 3 different formats, and we're going to look at how we can find errors, because this is the spot where errors happen quite often. Then we're going to stop and we're going to look at where we've come from the very beginning to where we are now, and we're going to look at that in the format of an accounting cycle. Okay? So what we've done so far is we've taken our business transactions here. We learned last section that we are going to put them into journals, and now we're going to post them. Can't really see that, but that says posting. Journalizing is writing them in the journal, and posting or putting them into the ledger is called posting. This is what a ledger would look like. So up until a couple sections ago, we always used T accounts. So what I'm going to show you is what our T account would look like and what now our ledger is going to look like. Each account has its own ledger, and this one's called cash. And we want to give every account a number so that we can easily keep track and find information. So we're going to take the stuff from the T account and we're going to transfer it down into the ledger. So do you see here on November 1st, $2,000 is transferred over here. It's happening on November 1st. You have a debit of $2,000. And this is the important thing to notice, is that this column at the end is your balance. You had no money in there before. Now you're adding in $2,000. That gives you a final balance of $2,000. Because it's a cash and it's an asset, it always is going to have a debit balance. So DR stands for debit. This PR stands for post reference. And that means that you are taking the information from the general journal on page 1. So if we were to pretend like what we learned in last section, we used page 3. In this one, they're wanting us to use page 1. So I'll talk a little more about that later as well. So do you see here on the 3rd, transferring this information here, a debit of $75. Now you have to take the $2,000 that you had here and add another debit of $75, gives you a balance of $2,075, and it's a debit. Okay, and then on the 3rd, you had a credit of $150. See where that's going? And now you put the $150 in the credit column. You have a debit here of $2,075 and the credit, so you have to subtract those two. That gives you a new balance of $1,925. You do the same thing for your 100 on the 5th and your 200 on the 6th. And you see here how the page numbers are changing? And this equals your final balance, which is what we also had up here. Okay? Okay, we want to talk about chart of accounts. We talked about this just a little bit, about putting every account with a number. You want to have accounts having numbers so that you can easily locate them. You want your assets to be in the 100s. If you have a really big company, you might make it in the 1000s. Your liabilities will be in the 200s. Your owner's equity will be in the 300. Your revenue will be in the 400s, and your expenses will be in the 500s. It doesn't matter to me in the order that you put them in each category, like right here. Usually, actually, the textbook gives that to you already. But that's called a chart of accounts, when you list all of your accounts. Okay. Okay, so this is called posting, which I've already kind of showed you. So this is your general journal from what we've already done in the last section. And up until now, you had the post reference column blank. What we want to do now is when you actually post it into the ledger or the recipe card, you're going to put the account number where you put it. So your cash has account number 100. That's how come there's a 100 there. Okay, your sales, if it has a 400, if we flip back, we can find revenue sales is 400. So we would put a 400 right there. That tells you that that has been posted and you can carry on, you can move on. Okay, so this is the sales part here that we've already talked about. Okay, so there's your steps in posting. I'll go through these really quickly. You locate the accounts that you're dealing with. You record the date. You enter the amount. You calculate your new balance. And you complete the ledger posting reference column. So I've kind of showed you an example of all of that already. So I'm not going to spend too much more time on that. It's in your textbook if you need to go back. Okay, so now if we were to compare our general journal to our general ledger, it would look like this. And now this one is the sales one. Do you see that with account number 400? So we've just posted the second amount, the transaction here. The sales part has now come down here. So the hardest part with this is that you're always going to be flipping back and forth, back and forth, back and forth. And that's not really the most convenient way of doing it, but that's how you do it. Okay, so this is an example of your general journal. Has them all listed, and you can see that the post references have all been filled in. So that means that you've done your work for that time, and you can keep on rolling. Okay, now if we were to flip back, our accounts from our general journal would look like this with our ledgers. Okay, we would have all the cash done, we would have all of our sales put in, all of our advertising expense, and our salary expense. So it's kind of spread out. Okay, the one last thing I need to show you too is recording the opening entry. At the beginning of the year or the beginning of the month, you have money that is kind of carrying over from one month to the next. When you put that in the general ledger, we call that an opening entry. So this is an example of your opening entry on September 1st. You're starting with $4,000 cash, $5,000 equipment, $20,000 per truck, a bank loan of $15,000, and your capital is worth $14,000. And the memo here is what's happening. You're starting your company, and that's what you're starting with. That's called an opening entry. Okay, you also have to make sure that if it isn't done for you, that you actually open the ledger accounts by putting the names, the account numbers, and the opening entry. So your cash is starting with $4,000. You're putting that in first. Your equipment is starting with $5,000. Your truck is starting with $20,000. Your bank loan starting with $15,000. And your capital starting with $14,000. And then as the transactions happen, you just keep recording them in. Okay, I'm not sure if we need to really worry about this. If you happen to run out of room on your ledger like this, what you do then is you say that you are forwarding that amount to another ledger, and you would still call it accounts receivable L. Carter and 102. But the number at the top of that ledger would be what you're ending with down here. I don't think there's any examples like that happen in Accounting 10 like that, but just in case you need to know, then that's what the first line of the second page of that ledger would look like. Okay, and then like I said, we're just talking about trial balance. It is a review, so we won't spend too much time on it. So at the end of the month, you want to make sure you do a trial balance like this, because you want to know if your debits equal your credits. If they don't, you need to go back and find your error. If you don't find your error and it carries over into the next month, then you're going to have to go back eventually and figure it out. So it's easier to do it month by month. Okay. You also could just do a trial balance like this by just using maybe your calculator with your tape like this. And you would want to make sure that at the end you had a balance of 0. If you were to take all of your assets, subtract your capital and your liabilities, you would want to have a difference of 0. You also could just do the same thing like this, making sure your debits equal your credits. So those are 3 different formats that you might want to do. Okay, avoiding posting errors. So this is where people have problems and errors happen, and this is when you find them, unfortunately. So you have to go back and you have to figure out where you've made the mistakes. So following the 6 posting steps can help to avoid the type of errors listed below. So make sure that you don't post an incomplete transaction. You have to make sure your debits equal your credits. Sometimes you may only do a debit or a credit part, and you forget to do both parts. Sometimes you may put it on the wrong side. Okay. Also, maybe you might calculate the balance incorrectly, which is a hard one to have to go back and find. And a transposing error, this happens a lot in accounting, is when you, so if you wanted to write 18 and you write 81, that can be a really hard mistake to have to go back as well. Okay, 2 little tricks of the trade here. Right here. If you've made a mistake, so your debits don't equal your credits, the first thing you want to do is find the difference between the debits and credits. If the difference between them is 1, 10, or 100, there may be an adding or subtracting error on your trial balance or in the ledger account. So if that happens, if your difference between your 2 totals is 1, 10, or 100, go back and re-add and make them added properly. Okay? Also, check to see if an account in the ledger with the same balance as a difference has been omitted. So if your difference was 60, go back and see if there was a transaction for $60 somewhere that you might have omitted. Another really quick one is when you do have a difference, divide the difference by 2. The amount may have been placed in the wrong column. So if it was, your difference was 120, divide that by 2 and go back and look for a transaction of $60 that maybe was put into the wrong account. If the difference is divisible by 9, that means that you've made a transposition error. So if your difference is 20 and 11, and you subtract that, you get 9. If it's divisible by 9, then go back and look and make sure that you haven't written something backwards. Okay, and then everything else is pretty simple, and sometimes you just have to go back and re-look. And if you still haven't found your error, relax, go on with something else, return back later with a clear mind, and I bet you'll find it no problem. And because I'm the teacher, you can always feel free to email me and I can give you some hints as to where you maybe have missed something. Okay, so that's an example here of a transposition error. Your differences are off. So they're finding the difference of $90 and it's divisible by 9. So then they know that maybe they've written something wrong. And in this case, this 560 should be 650. Okay, so that's an example, a quick way that you can go and find your error. Okay, and then once you've got it, then you can fix it up. Now, they say in accounting that you should never erase anything. You should cross it out and then just rewrite it. Go ahead for the sake of this course and erase it. Otherwise, things get pretty jammed and then you don't know, you can't fit everything in. Okay, I don't think we need to talk about that right now. Calculators are our best friends, so make sure you get one that has nice big buttons that fits your key, your fingers. Okay, so when you're doing something like this, you won't be using anything that with a paper, but quite often accountants and people doing books will, so they can actually take that piece of paper and they can attach it to their form. Okay, now if we were to stop and look at where we've come, we've started with business transactions. So transactions that happen in your business. Then we've analysis, and now we're going to use journalizing, putting them into the journal. We learned how to post them. We learned to put them into ledgers. We learned how to make a trial balance. And we've also learned how to make financial statements like balance sheets and income statements. So you can see where we've gone and where we're wanting to head. Okay, that's a lot to kind of get through your head here right now, but hopefully that's enough to get you going.